Hey everybody, welcome back to the channel. Today we're going to be talking about the death knell to the economy, the middle class, and life as we know it. Everything's about to change. It's been changing. It's happening. And today we're going to be talking about the tax hikes, the Biden tax hikes. If you hadn't heard about this, it is going to be. Listen, so we've got people that are about to retire that are planning on and going to try to live on $2,000 a month. How's that possible? We've got Trump's tax breaks, it pretty much 2 to 3% per bracket less, and we're losing that. I got the numbers wrote down here because I want you to be aware of what's probably in the mail. We've got capital gains tax that will exceed 50% in many states. California, 59%. New Jersey, 55.3%. Oregon, 54.5%. Minnesota, 54.4%. This is crazy. Now, these gains are not adjusted for inflation. And I thought, well, has it ever been? Well, actually, in the 80s, they did adjust for inflation for about 5 years. So you didn't have to pay taxes on the whole thing. You know, it's really going to mess people up that have a small business, that are selling it, and then inflation eats that up as well. It's very sad to see this happen, and it's coming at a time where interest rates are already about to eat people up. There has never been a better time, in my opinion, to be short, to be risk off. We talked about it the other day. Hugh Henry was saying foreign currencies, be short foreign currencies, long dated treasury bonds, and he said 40% Bitcoin. Yeah, I don't know about that one. That's a dice roll. But precious metals seems to be the thing that people are getting into as of right now. And just remember, the wealthy know first. Think about all the wealthy that have been selling stocks. I've been making videos constantly. Jeff Bezos, Metaboy, Elon Musk, all of them have been selling into strength. That's how they do it. That's how they have to sell into strength, or it would just crush it and it would go straight down. They sell into strength, it goes back up. They sell into strength, it goes back up. And then they're done and they just let it go all the way down to the bottom. Warren Buffett's holding more cash than he ever has. The wealthy are getting ready. I hope you guys are too. As ready as possible. Like staying out as much as dead as possible and bracing for impact. The 25% on unrealized tax. You heard about that one? So even money that you make in the stock market or wherever it's unrealized, you have to pay 25% on that. And that's not everybody. That's for people that have over 100 million in assets. But it affects everybody. When you start jacking with the people that create the jobs, they only pass it down. They're not going to make less, or they just won't do it. Biden has proposed the highest top capital gains tax in over 100 years at 44% for long-term capital gains and qualified dividends. Gains are not adjusted for inflation. The gains taxed are not real gains, yet taxpayers still owe on the full amount. Biden's top rate is more than twice of what China's capital gain tax is. It's 20%. You know, we talked about Ray Dalio and how he said there's 4 ways this is going to go down. Default, raise taxes, printing money, and what was the other one? I can't remember. But it looks like raise taxes. Looks like they're going to raise taxes and print money. In the short term, they're going to raise taxes. And as the economy falls. See, that's what they got to have. They got to have less jobs. They got to crush this economy. They have to get everybody not doing as well in order for inflation to go down that they created. I was looking today, and here's some evidence. I've been trading every day, watch stock market every day, probably more than I should, because I'm determined to understand it completely and make money doing it. And there is one trade that I know has never been wrong since 2008. And if you go to your charts, go to the monthly, go to 6E1 or the euro, and look at what happened after the GFC in 2008, after the banks and the government got together and they completely let Pandora's out of the box. They messed everything up because the euro was going up, and then the United States said, no, bleep, we can make all the money we want. Oh, okay. The euro has been going down since 2008. You can put a trend line on the monthly chart straight through that indecision candle all the way down to the tops. It has never broken that top since 2008. We're not at the top right now. And if we do get there again, when they turn the money printer back on and they pump us up to that important level, I'm going to be doing a moonwalk across the pier. I'm supposed to feed the fish for you. And you're going to know about it, because I really want people to take advantage of everything as it's going down. It's one thing to watch the market crawl up. When it goes down, it's like this, and it comes up and like this. And there's ways to catch it. And I'm planning on doing that. I'm doing exactly what I told you I was going to do. Budget calls for about $5 trillion in total tax increases over the next decade. But we already know that you can't tax your way out of this. That's not going to happen. You can't even pay the interest if you taxed everybody 100%, Mr. Government, Mr. Big Brother. I wish I would have thrown that food where you could see them. It's a big one hitting right there. So, Biden tax hikes will significantly reduce after tax returns, just as rising rate environment may already cut asset values by 20%. A lot of assets will get cut more than that. Look, I'm looking to buy rental properties, pennies on the dollar. I believe that when interest rates go to the teens, and I've been saying 10%. One of my buddies a long time ago said is 14, 15%, and that is so hard to imagine. But that's on the table, guys. These nut jobs want to crush the economy. They've got to get inflation down. If they don't, and it runs away, what happens to the euro? It just goes to nothing and they don't have any money? No. Well, in the short term, but they're going to come up with a way to have their own money. Oh no, Chris, the U.S. dollar's here forever. It's never going to go away. Well, maybe not, but maybe a gallon of milk will cost $100. Oh, by the way, I took a little note. Gold in 2002, or 2008 rather, was $872. What happened? Why is it more now? Why is everything more expensive now? The U.S., this is Jamie Dimon, by the way. He did an 80-page letter warning of persistent inflation, high stock prices, and recession risk. And I watch the markets every day, and I can tell there's this, confidence in continued growth and declining inflation rates. 70 to 80% chance of a soft landing. Well, Jamie Dimon says, no, it's more like 35 to 40% chance of a soft landing. And he says 5 factors could contribute to ongoing high inflation: fiscal spending, remilitarization, trade restructuring, green energy needs, and energy cost. Energy, oil mainly, is about to go to the moon. We've got war brewing. There's so many things. I didn't really want to make this a doom video, but that's pretty much what it is. Saying that oil is going to go to places we've never seen it before. I've been saying in the Thunderdome, $100 a barrel is going to be a deal. And I still believe it 100%. Now, there's a little bit more. Inflation has been accelerated since October of last year. This is Jamie Dimon. Prices rose 4% in March alone, putting inflation at 1.1 for the first quarter of 2024. Guys, I want you to make sense out of this the best way you can and try to understand everything I've said I was going to do is in shorting retail, shorting the commercial real estate. Go check out SPG, JLL, check out Macy's, check out Gap, check out Guess. Look at all those on the charts and just know that I've been short for 2, 3, 4 weeks. It is wild to be able to do that. And I hope y'all are participating and getting ready. Get your trading view set up. Get all your ducks in a row so you can take advantage of the falling prices. A lot of us weren't able to capture the stock market that went up forever, but we're completely taking full blast of the inflation that we're getting hit with. And keep in mind, the capital gains tax is going to eat a lot of the profits up. That's why it's better to trade futures. The taxes is like 40% better there. But this is not what the video is about. I just kind of want people to get ready, you know, get in position to be able to understand what's going on, and maybe short the market as it's going down. What we've been talking about is happening right now. Okay? That's it for today, guys. If you like this kind of information, hit the like button, subscribe, ring the bell. I'm going to be producing more financial information because there's going to be a lot of people starting to hurt. There's going to be a lot of people that are already there, and it hadn't even got bad yet. I mean, it's in some places it's getting worse, but when they do these tax hikes, when inflation stays persistent and we start to have really bad stagflation, nothing's doing good, higher taxes, that's how they get inflation down, and they know that. Unemployment's going up. It will continue to go up. People have to have 2 and 3 jobs just to make it. It's not supposed to be like that. And they want to tout how good the economy's doing. It's sickening. It really is. Oh, I do have a little bonus if you made it to the end of the video. I was going to make a separate video for this, but I want you to know about it. $300 million has been allocated to go for the Ukraine border security. Guess how much is going to the United States border security? 0. Nothing. Our national debt is over $35 trillion. Bars and nightclubs are in full force in Ukraine. Ukraine has more bars and restaurants and nightclubs than before the war. And the numbers I want to tell you about, I guess that wasn't it. The Trump-era tax cut will expire December 31st. And if you're making $182,000 to $231,000, then that's 32% back up to 33% is what you're going to pay. That equates to $7,280 or up to $902 $240. So if you're making that, you're going to pay that much extra, like 7 to 9 grand extra. If you make 44,726 up to 95,375, you're going from 22% back up to 25%, which is $1,320 up to $2,850 extra than you did pay last year. If you're making 11,000 to 44,000, you're going from 12% up to 15%, which equates to $330 or $1,320. It's about 2 or 3% on each one, and that's just another gig, another cut, death by 1,000 cuts. And I said it in the beginning of the video, this all comes when the people that are retiring are going to try to live off of $2,000 a month. Get a side hustle, guys. Learn how to trade. Do your best, because it's fixing to get nutty. Have an awesome day. I'll see you in the next one. Later.